back, everybody. It is Wednesday here. Welcome back to the Everyday Growth Advisors live stream. What a muted day today. How are you guys doing? Welcome in. I know it's pretty early where you are, and it is pretty late where I am. Hope you guys having a coffee in your hand, or your bagel, and ready to break down this market, including the intrinsic valuation of CVS today. Gonna be breaking down markets for you guys so that you don't have to do it. So let's get it done in a second here. What's up, Daryl, Landon, Susie, Aaron, Alex? Welcome. So in news today, mainly, not really much going on actually. Stocks advance with U.S. futures, Treasury slide. It's not really the case right now. That was pretty old. We actually look at the futures right now. We're kind of trading in a tight range. And I was mentioning this to the team yesterday on Discord that we might end up trading between this 3,900 to this 3,800-ish range for a while. We need to break either below or above to secure either a bullish or a bearish side movement. That will be the case for today's price action. We've been testing these levels multiple times, trading in this tight range, and almost seems like we're kind of like in a little bit of a bull flag, if you will. It's kind of forming a bull flag at the moment. This is the flag pole. You can see that, right? A little bit of a flag pole there. And make it obvious there. Yeah, there you go. Something like that, right? And usually this is actually a bullish pattern, but we'll see what happens. Definitely not possible to predict whether we're going up or down, but this kind of a pattern is usually bullish. Okay, what this usually means that price action squeezing towards a downward momentum, but a break to the upside would cause this spike. A break to the downside would cause this demand zone here to fail. This is also a dual zone over here, so this level right here is actually a very crucial level right here. And this I'm plotting this on a 1 hour time frame, so this level here is extremely crucial, kind of a spot. And here, let's see, this right here. So the 3850 and the 3866 level here, these two spots are pretty much your battleground this week for demand to kick in. Anything in this region here seems like a good spot for liquidity to come in. We'll see if that continues to happen. Today we might get an answer on whether we get rejected or we break into this level, because we'll have the price action dip down into here or go above this level here today. So today will be the day that we probably will see the the outcome of what this consolidation is going to be moving towards. Are we moving to the upside or the downside? Either way, it doesn't harm anyone to take some hedges and stay hedged during this time. The overarching trend is still slightly bearish, I would say. Still kind of bearish. Like that's the overarching trend so far. In terms of technicals here with SPY, this is the S&P 500 futures, by the way, and similar situation on the Nasdaq, as you can see here. Similar movement, similar everything. Also a bull flag, but the difference is with the Nasdaq, we've rejected the 200 EMA, a couple times now, and a 152. So this shows you a continued downside swings, but then we came back up here. So really, this would be the two levels that we're trading between on the Nasdaq here, which will be interesting to see if we can continue, trading between this range, or are we going to actually break below this range today? That will be the question for Nasdaq today. And then the Dow futures, obviously the one that is the strongest, looking the strongest, and we'll see if that actually holds this strong little level that it's at. Need to break below, sorry, we need to break above the 31,600 on the Dow Jones. The 31,600 is a strong resistance here if we want to move to the upside. So bulls have to capture that level. And on the bottom here, we need to break 31,200 from the bears for a downside capture of the 3,800s here. Those would be the key pivot points for the Dow in terms of support resistance structure, market structure, and the technical structure for this week. So if we get that, then we can see those movements. On a broader trend, you can actually see that SPY is actually forming kind of a I would say almost a symmetrical triangle if you look at it, but it's not a perfect symmetrical triangle. I'll show you what I mean here. So if you look at this real quick, put this down here, and we move this up here. Ignoring that we had a couple of spillovers here, okay, but this would be in turn your kind of a triangle that it's forming, kind of squeezing into this triangle here a little bit, and it would kind of form into this triangle if it can possibly go there, but we'll see if this actually happens. I don't really prefer this as a technical squeeze here, but it's also forming kind of a symmetrical triangle here. So that will be another thing to watch. Okay, that's kind of your technical analysis on the SPY, NASDAQ, and Dow Jones for this session today. Apart from that, Chinese hackers, requirement for tough and past requirement for foreign dependence, okay. And okay. Bitcoin back at 50,000. Is it really? Is it really back at 50,000? Oh wow, yeah, it's at 51,000 again. To the moon, right? To the moon. Everything to the moon. Let's get it. Wrist back on. Yeah, let's do it. Anyway, yesterday I took some positions on XLF and energy, BP. Don't know how those are doing, but BP's up a little bit, and XLF is the other one that I took a position on. We'll see if these hold. I like the prospect of going long on financials and energy. These are two secular trends that I'm watching, and I'm trying to benefit from these coming months. So we'll see if the trend continues here with financials and with energy. Now, the reason why I'm bullish on financials is because I actually do expect some kind of a rate revision pressure from the Feds. And if the Feds do, say anything relating to how they expect interest rates to increase, then banks are going to go to the moon. Okay, especially your JP Morgan, your Morgan Stanley, Goldman Sachs. These are all really going to rally strongly if interest rates get increased, because banks make money by charging each other more, and if the interest rates increase, then they're able to increase their margin of profit. Okay, right now their margin of profit very slim, so the market's pricing in the fact that this will happen soon, and therefore I am going to be taking a page out of that book and getting in there ahead of that happening. As for energy, BP is a undervalued energy play that's from not the US. I like foreign investments right now instead of the US. So kind of limiting and capping my exposure here to foreign investments. It also has a very big gap here at the cover on the $30 levels. Okay. So I've taken a long position in here. It looks really nicely bullish. It had the correction that I wanted to have. It's been really in a nice little channel. Okay. It came back down here, and so I've taken another position to take to the upside here by April. and we'll see how that pays out. Very cheap option contracts, and I got the $26 calls for April, which costed literally $1. Okay, costed $1. It's very cheap. So I think this is a pretty good one to hold for a while, and you know, in the hopes that energy keeps running here, foreign energies anyway, not just local like U.S. equities. I like the prospects of foreign investments right now. Remember that I continually talk about KWEB being at a very, very strategic point of purchase here. We don't know if we'll actually get this dip down again at $86 or so to buy this, but it doesn't hurt to take a starter position here and then add more as we go back down here. I will look to open up a position in KWEB as a swing trade. This is forming a head and shoulders pattern. But the right shoulder is not completed yet, so I may wait a little bit before I enter this position. That's the only thing that I'm waiting for on KWEB. And then JP Morgan Emerging Markets Equity Fund. This is another great one, which I'm looking to purchase shares off in the near future to diversify my long-term portfolio. I have allocated only 40% of my long-term portfolio at the moment. Okay, only 40%. I need to allocate 60% more, and I'm waiting for a dip in the market to do so. So we'll wait for that opportunity very soon. Okay, stocks rise on stimulus hopes. That's also other headlines, right? We have stimulus on the way, $1.9 trillion, right? Remember all of this. Now people must be asking like, oh my God, but T, why isn't the market rallying on the stimulus news, right? Well, the answer to that question is because it's already been priced in. A lot of things that you've been expecting have already been priced in on that huge monster rally that you saw on SPY, okay, on markets in general this past few weeks. So, they when the stimulus comes out, it doesn't affect the market because the market has been pricing it in for a while, okay, and then you have vaccines promised for all adults by May, which is good. Texas lifting the mask mandate. I don't know if that's such a good idea, but Texas, you do you, man. I don't know, man. That seems like a bit too early for a country to do that or a city to do that. Just to give you guys a little bit of a comparison, here in Singapore, we have literally 2 cases per day, but we still all wear masks every single day. We still wear masks. So this is pretty dangerous. Yeah, because you don't know who's carrying the virus. You could be asymptomatic and you wouldn't know. But yeah, I mean, if they want to go ahead and do that, then it's their problem, not ours. Let's see. Planning to file insolvency UK this week. Sends to sell Las Vegas properties for $6.25 billion as it focuses on Asia. Wow, that's interesting. That's a big one. LVS selling its properties. Well, I don't know if they will get more casinos in Singapore. We already have 2 of them here, and we don't have space for another. So, good luck with that. That's interesting. I wonder what happened to the stock on this news. Probably up here. Yep. Okay, that makes sense. Concentrating their holdings. China's Tencent becomes a investment powerhouse using deals to expand its empire. We've been talking about this for a while. Tencent being a really great investment opportunity. And then there's also TME, which is Tencent Music. This one's also been rallying, and I want to bring to your attention that this is actually in a very key level of resistance here. It might break out, which is Tencent Music Entertainment. This is another cheap little Chinese stock that you can, play if you wanted to take this to the upside, makes sense. A break above this level here will send this flying to the upside. It's been consolidating there for a while, got its correction to close the gap at 22. It's looking ripe now. Might be a good one. Okay. And okay. Crude oil futures. There was also a report that came out that OPEC is gonna increase supply to kind of cool the price of Brent or crude, WTI Brent. We'll see what happens. It's very hard to say, especially if there was another news piece we were seeing yesterday that the US wants to sanction Russia. If that happens, then we're going to see further oil crisis of some kind, because that's going to deepen US and Russia relationships. Okay, now make sure you guys smash the like button. Welcome in, guys. Good morning, Santosh. What's up, Landon? Spire looks at one to mold into a symmetric triangle. Oh yeah, that's what I said. He trying to take my credit. I guess great minds think alike, man. What's up, Ram? Good morning. Good evening. My Jianlong, what up? Happy Singapore. At least Singapore controlled the COVID-19 cases strong enough. That is true. Yes, we did control that. Seabass, good morning. What up? Okay, cool. So, quick little announcement. For those of you that haven't heard, yesterday we announced our technical analysis course. I know many of you have been waiting for this one, and so I just want to take a second to kind of talk to you guys about it and explain what this course entails so that you know. Once again, a 5-day course. If you want to enroll, I believe that I think maybe 7 or 8 spots have already been filled. And we are only planning to have 50 people join this wave because it's going to be too many otherwise, and I want to limit it to 50. You can go to learncompoundgrow.com to sign up. And this TA course is a fully comprehensive TA course where you will learn a bunch of different skills. Okay, so on the first day, we dive into market structures, we dive into candlestick patterns, deep dive, buyers and sellers, the psychology of day trading, top-down analysis, how you should do it in terms of understanding time frame, risk and reward management of smaller and larger accounts. Okay, and then for the second day, it's trends, channels, wave patterns, level 2 data, trend validation, reading level 2 data, the tape, okay, which is times and sales and buyers and sellers. And then reversal pattern strategies, breakout versus fake out patterns, sector rotations, and market fundamentals, which I'm putting in here as a little bit of a bonus. Then on the third day, we're going to learn about Fibonacci's, extensions and retracements, and trading breakout patterns, which are wedges, pennants, channels, double patterns, which are your double top, double bottoms, hidden shoulders, and cup and handles. And then my top 7 indicators, which are moving averages, RSI, VWAP, OBV, volume profile, ATR, which is average true range, and stochastics. Strategies on playing gaps. What are they? How do you play them? Okay, this is all going to be on day number 3. Day number 4, I'll be going through all the different styles of trading for day trading itself, and then swing trading as well. What are the different things you need to look out for? And I will be covering also the type of contracts you should be using. This is going to be similar but not the same from the options trading, which is the fundamentals of trading course, but it's not going to be the same. It's going to be a different approach to doing them. I'm going to concentrate more on technicals than I am on the options part of it, but I will be going through the options part of it very briefly. So remember that when you're signing up for this course, make sure that you already know about options. This is a advanced course. Okay, this is an advanced course. I'm going to repeat myself. This is not a beginner's course. This is an advanced course. So you can't join this without having taken the beginner's course, because the beginner's course lays the groundwork for you to take this course. And then using data such as bots and options flow to improve your success. Okay, how do you use those things? That's going to be day number 4. Day number 5, managing losses and expectations. Pre-market checklist, what you should be building out as a pre-market checklist, or what should be your routine before the market opens. Building a watch list and a scanner, how do you build your own watch list, and what are the things that you can use in it to build your own scanner. Market breadth, how the things you should consider in the market in terms of its the wideness of it. Then interest rates and markets, and an introduction to our Discord, which will be the last thing that we go through. Part of this sessions, you'll have 2 live trading sessions with me. You'll have a free trading journal with the risk reward calculator. One-on-one mentorship if needed, you can schedule that with me. Live Q&A sessions, which will be through the class, and then our own indicator setup, which will be sent out during the course. Lifetime access to the recorded classes and sessions. Okay, so those are all part of the TA course. And this is a 5-day live class. Okay, 2 live trading sessions, and it's gonna be from the 22nd of March to the 26th. All right, so we'll be running the beginners course next week, and then a week after break, and then the TA course will be running after that. The TA course will be $430, which has been discounted for right now, and eventually we'll be going to the regular pricing in the future. So I highly recommend to take advantage of this right now. Okay. So more information is, I've pinned this post in the chat. You can go read everything more about what what my profile is, what I have done before, and everything about me, some things that I've learned over my trading journey, and what we cover, etc., etc. Some alumni videos, questions, frequently asked questions, and you can even download the technical analysis report here. Okay, great. Beginners course is 10 a.m. Singapore to roughly 1 p.m. It's about 2 to 3 hours, but there are breaks in between. Excuse me. Okay, pre-market movers here. Let's have a look at the Dow Jones. Not many movers. Nope. CCL moving. AAL, travel stocks moving. Generally speaking. I think concentrate on travel stocks today more than likely would be a good idea. Non-farm payroll came out, was worse than usual. The rest of this data is coming out in a little bit. 9:45, we'll see more data as well. And Dish Lift is up. Wow, interesting. Did they report earnings, I wonder? They probably did. Yeah. Rocket, okay. Rocket was up like 40. How many percent yesterday? It was crazy, right? It was rocketing yesterday. RKT. Yeah, this thing went to like 70% yesterday, so it makes sense for the pullback. This one was short squeezed, so definitely be careful. Apart from that, I think this heat map says everything that you need to know. Really, really flat today. You can see literally flat, 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 flat. Only a couple names here that are green are LVS, MGM, your travel stocks mainly. Anything travel is up. And Dish, TE Connectivity, whatever that is, SVB, Financial Group. Banks are actually looking kind of nice here. A little more green than expected, and energy too. So the rotation seems to be working into those two as well. Everything else is just flat or red. So banks and energy and travel stocks. That's what you should be putting your focus on today, in my opinion. And let's see what happens after. Okay. Cool. Let's see. Any questions today? Zoom 420 call 312. Zoom, 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 zoom. Oh boy, that's a tough one. If I don't know. I mean, yeah, it's possible. It's possible, but 420 seems a bit steep, man. 400 would have been still like, man, like possible. 420 is like, ay. I think that if you break the 400 and then get there, yes, but I think that more than likely you get rejected at the 400. That's what I would say with Zoom. But then again, who knows? This might rip. Just knowing the way it moves sometimes. Hard to tell, but I do see lots of volume float out though, so be careful. If you're in the 420 call, your expiry is way too short. That's what I'm gonna say. Your strike price would be okay if your expiry was longer. Should we stay out of trading on these kinds of days? Well, it all boils down to your risk tolerance. Okay. Oh wow, SPY actually moved down below this level. We got a little bit of a sell-off there. That bull flag that we were talking about on futures. We actually broke below, guys. Futures selling off over here. Should we stay out of trading on these days? Well, personally, I think when you know volatility picks up, then it's good to jump back into plays once again. But I think that you should have already been set up from yesterday instead of jumping into them today. For me personally, I have been kind of setting up for those plays. But we'll see, how this pans out today. As I mentioned, this is a very strong area of demand. And so if we do break below this, then we'll see further pain down on SPY at the 3,790 level, which is the 379 level on SPY. So if you ask me if you should trade flat, I mean, if you shouldn't trade, the answer to that is, my answer would be no. But if you want to stay out of the market, it's a good time to stay out of the market. SPY does have a gap to go close at 385, 384 here, so that would be a good spot. This would be a good spot to take puts to cover that gap and beyond. That's my answer. Okay. Guys, oh guys, very quiet this week. I've been looking at the chat and, seems like you guys are, just chilling, just hanging out, which is fine, which is cool. Also, not sure if anyone sees this inverse head and shoulder here that may be possibly forming on SPY here as we come down to 384 here, or the 382 level. If we get that bounce right here, we'll be forming an inverse head and shoulder on SPY on the 1 hour here. So we'll be looking for that if that happens as well. This would be your head, your shoulders here. That would mean that we would bounce somewhere here, right here, come down, bounce, and then go back to the upside, and this would become your neckline. And then a break above 392 would mean to the moon. Why did NEO go down yesterday? Can you please do technical analysis? NEO. Well, NEO was earnings gap down and a continued rundown. So it wasn't really anything to do with why it's been going down. It's earnings. It performed poorly for earnings. I'm pretty sure that they beat. What was it? I think. We can look it up. Mixed Q4 results. Total revenues. Okay. I mean, I think the delivery numbers were more than likely what was causing the stock to sell off. But if you ask me, seems like they did okay with sales. Full year 2020 vehicle sales were this, representing 100% increase. Margins were down. Gross margin for full year was 11%, compared with negative 15%. Loss from operations was at 702 million, decrease from the last year. I don't know, looks good to me honestly, but looks like obviously you got to read more into this and see what actually happened, because I got to look and dig deeper into the 10Q to see why the market didn't like this. But there's obviously something here that they don't like that caused the sell-off. From a technical perspective, this was already in a downtrend. It was already in a downtrend, and so you're pretty much fighting against the current here. So from a technical standpoint, the volume has already been decreasing. It has been rejecting the 50 EMA a couple of times, and then a gap down on the earnings. So it's pretty straightforward, right? I would think it's just a straightforward case here. Really not much else to talk about with this. I do think this is a nice little time to pick up some shares though. If you're looking long term on NEO, this is a good discount to pick them up, I would say. If you really like your investment thesis on this business and you think it'll grow. Okay. Hey T, it's Toby. I'm excited for a technical analysis course. Hey Toby, what's up, man? Welcome in. Yeah, thanks for signing up. I'll see you in class. Would you mind doing some technical analysis on Intel? They had a solve yesterday, which may be due to a 2.18 billion penalty they have to pay. Absolutely, no problem. Let's have a look. So Intel has actually been in a pretty nice uptrend, and I think it broke this trend line here. Actually, hold up. This trend line is now valid. It's still valid, actually. It's still valid. I don't know. I still feel it's a great time to pick up Intel here, actually. It's still forming a nice uptrend. And, ever since the sell-off that happened, we're going back up to those levels again. And chip shortages right now, which would mean that all semiconductors would probably, rally in the near term, just on that news itself. If Intel comes in to save the day, but then they have a delayed production cycle though, remember that. You got to look at if we can get the bounce on this lower channel here, which it seems like it will bounce. But mainly you should focus on if it can break above the 60, let's see, the $63 level. A break above the $63 level, and then further confirmation of a bounce here to the upside. This would be a nice play to the upside if we can get the confirmation on Intel here. So I picked it up $40 doing a beginner's course. Yeah, that's beautiful. You must have made a nice penny on that. That's beautiful. I was screaming back then when it was $40 that this stock was undervalued. So it's good that you picked it up right then and there when it was 45 or so, 44 at this level. Wait for the hold above this level though. Don't take it right now. If you're adding to your shares, wait till the hold above the 63. You know, even 64 is fine, right? Break above 64, hold above 64, then you can start to take another position on this one, to be honest. ENVA looks very interesting, but I believe it could dip to go for a swing trade. Market cap of 1 billion. Yeah. Looks overbought to me. Needs a pullback in order to be considered for a upside again. So yeah, you might want to consider if it breaks below this zone, then you might want to consider a short position. Below 29 is a short to the 25 zone right here, and then consolidation at the 25 zone, which is the 200 EMA, would mean a bounce to go long. That's the way you can play this: short first and then long. That's the way I would look at it. Great. Okay, let's have a look at CVS real quick. So this is our ticker of the week, and it's been in this demand zone, kind of waiting. Market's been pretty choppy, so it hasn't really been making a move. But you know, this looks like a stock that has promising benefit from the COVID crisis. But then when I look at the financials, I was going through the balance sheet. Well, the consolidated statement of income here for Q over Q for the past, let's see, 1, 2, 3, 4 quarters. Okay, so year over year, Q over Q. So 2019 Q1 to 2020 Q1. You know, and we want to compare Q3 and Q4 seasonally. These two are probably the best ones to compare. So these two columns are what we want to compare. Sorry. These two. Oh boy, let me just do this and this. These two are what we want to compare. And so if we look at revenues here from products, you can see that they boosted revenues just by a little bit. Like the growth in revenues in millions are really not that much. And so revenue is growing very slowly with this business. It's not a cash cow. You know, it's having a very tough time growing revenues. In terms of premiums, you know, that's what's kind of bringing in money. Through its CVS health structure. And an investment income is bringing in some money as well, which kind of offsets other things. Their cost of product sold is very high. This business has a very high cost of goods sold. So just check out, like, you know, their cost of goods sold makes up, you know, a very big chunk of their revenues. And then the benefit cost as well, like, drains pretty much all of their income away, leaving very little, you know, money for net income. So interest expense, your operating expense, your operating income, income before tax, income after taxes. The net income is literally only 1.5 billion, okay? Q over Q for this 2 quarters, you can see actually dipped in Q3, and then in Q4 dipped even harder. And this was something that is concerning to me, the company is not growing bottom line, but is growing top line very, very minutely. So what does this tell me? This tells me that the business is having some kind of a a tough time with operating expenses. Okay, so increased operating expenses, but not increased revenues, and that is worrying for me as a business of this size. Okay, and a mature business like this. So this part of the business is growing very little. Okay, but then this part of the business is growing very largely, and part of that is because they have quite a bit of debt as well. Okay, so their interest payments are pretty high. Okay, their interest expenses make up almost half or so of their net income, which is a lot. Okay, it's a lot. I'm talking about after deduction. So you can see this is like 600 million, and their net income is 900 million. You can imagine they have a lot of interest to pay on their debt. So this business really needs to lower its debt burden in order to really be, relevant or gain investor appetite. The amount of debt that this business has is not very great right now. So you can't, unfortunately, a business like this, you can't do a DCF valuation. You have to do an EBITDA valuation. I don't want to use cash flows from revenue. I would rather use cash flows from operations using a 10-year DCF, and their revenues grow at a very slow rate. So this is a pretty simplified valuation of this business. Let's say they grow 4% this year, 3%, 3.9 to 4, and keep growing 4% for the next 3 to 4 years. Let's assume that this COVID crisis gives them a little bit of a head start here, and then they start to taper off within the next few years after that to 2%. CapEx here, roughly about 1%, and that's what we're going to take for the next foreseeable future. CapEx at 1%. Working capital at minus 3%. We're going to keep that the same. Depreciation and amortization at about 1.6%. That's what I'm forecasting. And the tax rate at 41%. Pretty high tax rate. We can actually lower this down just a little bit to make it about 38%. That would be better. The discount rate here is relatively low. CVS doesn't have a very high discount rate, which kind of brings the terminal value to a 8.8 to 10.8x EBITDA exit multiple, which brings the fair valuation of this business to $65.31, which means that this stock is actually now overvalued. Okay, so 65. How much is it? 65.31. So there we go. And we'll add a little text bubble here. So that we have a little note if the stock price comes down to this level. And we'll lock this right there so it doesn't move. So that's your evaluation of this business. Now looking through their 10Q over here, they're still expanding, and mainly in this 10Q, if you were to go through the whole thing, the main gist of the conversation is we're actively paying down our debt, which is the main focus of what the corporate governance is concentrating on right now. And also trying to benefit from the COVID crisis. Okay. Other than that, they really go into the fine tunes of all the numbers and talk about how they're actually going to be diversifying their retail and LTC business, the long-term care business, which is something that CVS may benefit from in the future through an aging population, right? So that's their response, and then here's their full year guidance. So they're expecting cash flow between 12 to 12.5, which is down from last year's cash flow. But then I think they might be taking into account the fact that they might pay off some of the debt, maybe $3 billion worth of debt. So this business, forward looking, doesn't look very great right now. I wouldn't put my money into this thing right now as a long-term hold. I want their debt position to be a little better before they kind of, start, for me to start putting any money into this as a long-term holder. I would think like, oh, this business would be a nice one to hold for a long term, but nope, not really that great. So yes, that's CVS for ya. Who enjoys me breaking down the balance sheets and all the the really technical finance stuff, like the income statements and all that? Who enjoys me doing that? If you do, make sure you smash the like button, guys, and also write a comment in the chat so I know that you enjoy these. Cyber Shinobi, Uber megaphone on one day. Okay, I'll check that out. Thank you, Landon. Let's see. I recommend his classes to anyone and everyone. There are a lot of people that teach his stuff, but this guy knows his stuff, man, and he's passionate about it. Thank you very much, man. I appreciate it. My PLTR is losing value when I bought it, a fake rebound. Should I try to roll it out, or should I take the loss now and wait for a future confirmation? Okay. I enjoy it. Great, Dalton. Awesome. A lot. Learning to read those statements is really important. Yep, exactly. Very, very important. I wish that more people taught you how to do these things, because these are the real. Let me tell you guys. This is where majority of the money is made in finance. If you think that majority of people who are investing or are trading are looking at these the whole day, no, we're actually looking at these the whole day. This is where you know the company's health, not here. This doesn't tell you anything about the company's health. This tells you everything you need to know about the company's health. Okay, these things right here, these balance sheets, these income statements, all of these things here, this is what you need to know. Okay, like look at the balance sheet of this company, right? And you can, the balance sheet is like a storybook. You get to know a lot of things about this business, and balance sheet is always a good understanding of the health of the company's structure. Why? Because in this, in this specific financial document, you will see that the assets always equal to the liabilities plus the owner's equity. Okay. So that's your accounting formula. It always is the same, okay? And so this top portion here has to always equal to this portion, okay? You see that? These two will always be the same, okay? And then you get to see from there where are the areas at which the company might be over levered or under levered, right? So you can see what's happening, what's growing, what's not growing, right? Like for example, let's just run through this real quick for you to understand. So assets wise, current assets. What are current assets? These are assets that are expiring or not expiring, but will be closed out from this account within the year. The end of the year, it's assets like cash, short-term equivalent, short-term investments, accounts receivables. These are all receivables by the end of the year. Inventories, other current assets. These are all things that will be closed out from this account when the year ends, the fiscal year ends on, and you can see 12/31 is their fiscal year. So what happens on this day? All of these get closed out to retain earnings. Okay, and when these get closed out, this account starts with a fresh balance the next year. They bring the ending balance to become the beginning balance, and that's what starts the accounting year again. Okay. So accounting process is very important, because when you're learning finance, you have to pick up the accounting process as well. That's what you do as a finance person. Actually, your main job is to collect the information that about what the accountant has done and analyze it. That's your job. So you kind of have to know the accounting process as well. That's what your job is as a finance major. Okay, and then long-term investments. These are your, longer term. So those fall under regular assets. Okay, so total assets make up are made up of two types of assets. You have current assets, and you have basically long-term assets. Okay, current assets are within the 1 year expiry. Long-term assets are longer than 1 year, right? And then these are your long-term investments. Okay, and you can see year over year they increase long-term investments. Year over year they increase the cash position, right? Year over year short-term investments have increased. Year over year account receivables have increased. Okay, accounts receivables are assets. They're recorded as assets because they're money that is coming in. Okay, it's going to be coming in. Inventories, those are obviously things that you need to sell, right? And other current assets. Okay, property, plant, equipment, this is usually your leases or your buildings that you own, stuff like that. Operating lease right of use assets, those are so this could be leases that you have, right? Goodwill is usually premium you pay on maybe, for example, you purchase I don't know, you purchase a business, you pay goodwill on it, that can be one thing. It's an intangible asset. Okay, so this is your intangible assets, which are net intangible assets, and then separate account, other assets. Okay, so those fall under different things there. And then you have your accounts payable. These are liabilities now. So now you have current liabilities. Current liabilities are 1 year liabilities. Okay, same thing, pharmacy claims and discounts payable. So these are your liabilities that are all within the year due. Healthcare costs payable, policyholder funds, accrued expenses. Accrued expenses are expenses that are occurring over a period of time, right? They're not recorded right away. Insurance liabilities, current portion, operating lease liabilities. So remember we saw operating lease right of use assets. When these get realized, then they get put into the current portion of operating lease liabilities. So as this lease is being paid down, this comes into become an expense. Okay, so your asset gets put into as an expense, and then you have your long-term debt, which is a lot, but they are reducing it. So this is what we want to concentrate on, because the long-term debt is very big here, very, very big long-term debt here. And apart from anything else on the liability side, this is the one that is the biggest worry, right? This is the biggest worry for this business. They have almost $59 billion in long-term debt, and so they're borrowing money, and the worst part about that is the interest expense that they will be paying on that. Okay, so insurance, income tax, okay. All right, cool. Now this is just a brief insight on how you would view this balance sheet. You can dig even deeper, because then you can go look at the cash flow statement, and now you can see where exactly is all the cash coming from. In finance, we have three overarching cash streams. Okay, the first stream is operations, the second stream is investments, and the third stream is financing. Okay, and these three streams will give you the cash flow statement. And out of all these different streams, you can see what is going on with the business in terms of financial health. So from operating activities, what's going on? You have cash received from customers, you have cash paid, you have insurance benefits paid. Money that's coming in is always without a parentheses. Money going out is always with the parentheses. So then you have a net cash used for whatever that period would be. Okay, so you see it says net cash used by operating activities. So this minus this minus this minus this plus this minus this gives you this. So you always want to end up with a positive operational cash flow, which is what they do have, which means that business activity is healthy. Okay, for the gist of it, this is what you need to know. If your operational activities are negative, that might signal a deeper problem in your business, which means that your operational efforts are not even profitable. Okay, and from an investing standpoint, this is, for example, usually money that they put down into investments, right? Because businesses also invest. Okay, they're not just gonna let cash sitting around doing nothing, right? Just like how Apple has a ton of money in short-term investments, right? And Berkshire Hathaway as well, right? So the same thing from here. So proceeds from sales of maturities and investments. purchase of investments. They bought, so they sold some and then they bought some, right? This must be some notes maybe that paid them out, right? Back, maybe they got back the notes plus principal plus interest, and then they used those notes plus more to buy more longer term notes, purchase of property equipment, proceeds from sale of lease back transactions, acquisitions of acquisitions net of cash and investments, and then sales and subsidiaries, from a sale of subsidiary. So if the subsidiary sold something, it comes through here, and then other is for other stuff. So their investing activities for this period was a negative cash flow, okay, which is normal. Negative cash flow for investing activities is still all right. And then you have your financing activities, which are borrowing. This is against equity majority of the time, okay. So you have net borrowing. They didn't borrow. Proceeds issuance, long-term debt. So they did take on additional long-term debt in 2020, okay. They received 9 billion for that, almost 10 billion, and then they paid down 15 billion, okay, and dividends, So this business is highly levered from my perspective. When I'm looking at this cash flow statement, I'm seeing, you know, this is a very highly levered business, and that's all you really need to know from here, okay. The way you read this is, this business is highly levered. They're using a lot of their existing cash flow to take on more debt into the future, but paying off existing debt at a smaller rate. So if they were actually, you know, and you would have to obviously look at how this goes into the next few years, but I think you guys catch the main idea here and the main focus. Great. So I wanted to cover that, show you guys what I see, and for that reason, this is not a buy right now. This is more of a I would hold, or you know, even consider shorting the stock at this point. It broke down below the channel. I think CVS, realistically speaking here, it could come down. Okay, it could come down to a much deeper level. So you're going to see where my forecast would be for this. Now we go look at the technicals. After we've done our analysis, we can come and look at the technicals to see where this is likely to land up, right? And our previous swing high is right here, up on the top over here, right? And our swing low is going to be right here. Okay. I think, wow, our intrinsic valuation is actually the perfect spot for the stock to come down to. So this is where our intrinsic valuation is, right? And this is exactly the spot at which I would draw my target, the 61.8 golden pocket right here. And so I'm going to put a target right here, and we'll see if we actually hit it, okay? I might take a short position in CVS, who knows? This might actually pay out. So 69 to 65 is a pretty decent move here. Also a strong level of support here at the $65 level. So I think the $65 level is a very, very capable target for CVS, and that's how you combine your technical fundamental analysis. I hope you enjoyed this live stream, and I hope that was helpful for you to understand and learn, compound and grow with us. I'm going to jump on the call now with the rest of the team. Thank you very much for your time, you guys. See you on Friday. We'll choose a new ticker of the week, and I hope you guys have a great rest of your day. Take care, guys, and peace out.